Everyone, well, or good afternoon or good morning, depending on where are you right now. We are delighted because we have friends joining from Milan and Rome, of course, but we got other friends from Washington, DC, from Kigali, from Madrid, from Paris, from Canada. So I guess these are the advantages of technology. We miss the good old days when we used to meet in person, but well, everything has advantages and disadvantages. And, we just by switching language into English, we can have many more friends. So welcome everyone. In these difficult times when the COVID-19 crisis threatens to keep all of us in a reactive mode, we at BCCI Inclusive Finance and Forum per la Finanza Sostenibile are seeking dialogue. We are trying to assemble ideas that can turn into visions for a more resilient, inclusive, and sustainable next normal. A future built in part by the innovations impact investors will pioneer. And for this reason, we have invited Bertrand Badré to join us today. Bertrand, thank you very much. I can't express with words how thankful we are, how honored and how delighted we are to host you today. If you don't mind, prior to introducing you and who you are to our friends, I would like to thank our sponsors, Credit Mutuel Investment Managers and Exxon Asset Management, for not only for allowing us to have this three-part impact investing series, but most importantly for your support over the years. I mean, without you both, it would have been impossible. So thank you, Simonetta. Thank you, Vincent. Thank you, really. I wanted to say thank you to Federica, Viviana, Vanessa, and Maria Luisa as well for all the work done behind the scenes. And as most of you know, these three-part series are the result of a partnership between BCCI Inclusive Finance, which belongs to the British Chamber of Commerce for Italy, and that's why the acronym BCCI, and Forum per la Finanza Sostenibile, which is the Italian Sustainable Investment Forum. And for that reason, I would love Simonetta and Francesco to say a few words, to say hello to you. Simonetta is my acquired sister, the co-chair of BCCI Inclusive Finance and the head in Italy of Credit Mutuel Investment Managers. Prego, Simonetta.
Good evening, good morning, good afternoon. It's a pleasure also for me to welcome everyone for being here with us today. I'm very pleased to welcome those of you that have been with us for a long time now, as well as those are new to this group, because there are new people in this group, so it's important to welcome everybody. Before to leave the floor to Francesco and Paule and Bertrand, I would like to have just a few seconds just to say which is our mission when we started, and in our mission we would like to redesign the role of capital in society by building a new future in which finance is instrumental to social progress. Sustainability challenges as poverty, climate change, gender gap need a profound system transformation and a deep personal renewal. Our personal contribution is necessary more than ever. So we hope today this event inspires ideas and discussions around the ways that we can make our world a better place where to live. So I thank you again, all of you, to be part of this journey with us. And now I leave the floor to Francesco.
Thank you, Simonetta. Thank you, Paule. Thank you, Bertrand. I'm really keen to welcome Bertrand today and being a partner of BCCI in the organization of this event. And a special thanks, of course, to Paule to promote this initiative. So, a few words, 30 seconds, 35 seconds, maybe. So first of all, one issue that I'm very happy that this year is 20 years from the foundation of Sustainable Forum and Sustainable Finance Forum in Italy, and which is quite important. We are not more pioneer now. Sustainable finance is mainstream, as you know. Just a couple of things is the first one is the responsibility. The key words for us is responsibility. I think that all the stakeholders today have to be more responsible. So we are talking about asset manager, bank, insurance companies, banking foundation, pension funds. Everybody have to be a crucial role. I mean that sustainable finance or finance is not a neutral tool. It is at the center of the debate on sustainable development. So this is the issue that mark a difference between what was the model of finance before. So the other issue is that social and economic emergency from one side and climate emergency from the other side. They are the two sides of the same coin. This is the issue. I mean that we have to pay attention to say, okay, we cannot deal with the matter of climate change because we have other urgency. Now we have to push for the recovery, etc. No, as European Commission underlined, we are talking about the same problem, and if you deal with this with the climate change issue, you absolutely have to face the social and economic opportunities that can come from a change of paradigm. So for me, it's quite important. So just to conclude, to saying that okay, we have to work together. Paule knows very well that I insist in this kind of public and private approach. I mean that we have to work together, and we have to look for an alignment towards the same goals, sustainable development goals. This, okay. I give you the floor, Paule.
Thank you, Francesco. Thank you, Francesco. Finance is not a neutral tool indeed, and I'm sure that Bertrand fully agrees with what you just said, also because I've read his book and the many articles he publishes in Project Syndicate, and I know for certain that that's the case. Thank you, Francesco. Thank you, Simonetta. So to our friends, ladies and gentlemen, I am very happy to introduce Bertrand Badré to you. Bertrand is CEO and founder of Blue Like an Orange Sustainable Capital, an impact investing fund created to provide financial returns while mobilizing capital for projects useful to humanity. Prior to that, Bertrand has had an illustrious career in both public and private finance. He was former economic advisor to President Chirac, CFO of Crédit Agricole and Société Générale, and managing director and CFO of the World Bank. I have to say that in this last role, he co-authored a report called From Billions to Trillions, which is considered a key publication in the world of sustainable finance. He is also the author of 2 books on how finance should be leveraged to build a better world. So this leads me to the first question, Bertrand. Unfortunately, I am still waiting for the English translation of your second book, Voulons-nous sérieusement changer le monde? I'm sorry for my French. So please, if you don't mind, let's concentrate on Can Finance Save the World? Bertrand, in this wonderful book, you look at the destructive role finance played during the 2007-2008 economic crisis. But most importantly, you provide a compelling vision of how finance can be a force for good. Would you please make a summary of your main message for our friends? Thank you.
Sure, thank you very much, Paule. It's great to meet you, Simonetta and Francesco. And while we get used to this virtual gathering, it's still very frustrating to be like speaking to your screen. But thank you so much. So, no, the main message is pretty straightforward. Actually, we had a massive crisis 10 years ago, which has been felt all over the world, but particularly in Europe, actually. And to address that deep crisis, we've done a lot of things, actually. We should not just forget about that, but we focused on the technical aspects of the repair. So we asked the banks to increase their solvency ratio. We asked the banks to work on their liquidity. We provided a little bit more security in the insurance and pension fund regulation system. In a nutshell, we patched up the system, but we did not really work on the design of that system and on the fault lines that have been revealed by that crisis. And there were a number of fault lines, in particular, because the system as we knew it was basically the baby of decisions made in the early 70s. And let me take two very important dates, which I don't want to say they are bad or wrong. I don't want to say that we move from like being in the dark to being in the light and then again in the dark, but they are important symbols. The first one is August 71, 15th of August 71, when President Nixon made the decision to temporarily suspend the convertibility of dollar into gold. I mean, it's 50 years and we are still under this temporary regime. This was the time when an ounce of gold was worth $35. I mean, as you know, it's worth a little bit more today, and it shows what happened in the last 50 years. So it's interesting per se, because we have moved with that from a world which was organized around the dollar, with the watchdog being the IMF. And at that time, everything was kind of fixed, and sometimes you kind of change the fixed link, which was called a devaluation. And now we moved into a floating mechanism, which more than the floating mechanism is a mechanics where market is really the default value setter. If I ask you how much is a dollar, you will tell me a dollar is worth X euro. I say, okay, good point. So how much is a euro? And you will tell me it's worth Y dollars. And it's moving every day. So again, it's not bad or wrong. It's just the fact that market has really entered our daily life. And for those of you, which I think is the majority online, which are working with finance, you know what I mean with accounting principles called mark-to-market. This is really where it's coming from. And few months before, another very important moment was an article by the great professor of economics, Milton Friedman, who published in the 13th of September 1970 in the New York Times, a very famous paper in which it provided an answer to a big discussion that happened in the US at that time. It was about General Motors. General Motors was the largest company in the US. It was a time when people say what is good for General Motors is good for America, and what is good for America is good for General Motors. And General Motors was considering to open its board, its governance, to 3 board members which would represent what was then called the public interest. Something different. And of course, Milton Friedman stepped up, published his paper, which was called The Purpose of Business is to Increase Its Profits. So of course, the paper itself was a little bit more sophisticated. In particular, it reminded people that public interest was supposed to be taken care of by governments, public authorities, each of us, etc., and that CEOs and companies were supposed to be part of that ecosystem. But we've kind of forgotten all the rest, and we focused on increasing profits. And so when you combine market predominance with a profit axis, then you enter in what has become the conservative revolution, the Washington consensus, the neoliberal model, etc., which has worked actually pretty well for a while, but which has hit its limits in 2007 and 2008. And we've not really addressed that questions. Is this model still okay for what we want to achieve now? So that comes to my point. So we've kind of patched up the system. So we are not dead today, which is good. We are not in 1939 or 1940. We avoided that. But it was true before COVID, and say even more true today after COVID. We have not addressed the fault line. So we did a try in 2015 when we worked, thank you for mentioning the billions to trillions report. when we work on the Sustainable Development Goals, when we work on financing for development in Addis, and when we work on Paris COP21 agreement on climate. So we designed the roadmap, but we did not really work on the underlying financing models that is necessary to get there. And we were off track before COVID. We are still off track after COVID, and that's why it's extremely timely that we have this conversation today. If we seriously want to change the world, there is more to do.
We totally agree, Bertrand, but thank you for this high-level explanation. We are fascinated by, your life, basically everything. The second question, I would like to discuss the role of private finance in helping companies truly pursue the triple bottom line. So in building what everybody calls stakeholder capitalism, because it seems easier said than done. And why do I say that? Because in our market economy, the corporation is a very important social and economic agent, especially if we think of the limited resources of the fiscal burdens of governments and the limited resources of the nonprofit sector. If we could make our corporations accountable for a deeper purpose, we would have a better capitalism, a more prosperous capitalism for everyone and for the planet. Making our companies accountable for a deeper purpose may sound utopian, but this was often the case between World War II and the 1970s. And it's exactly what you say, from the 70s on, things changed a little bit. And I recently read a report, a 1953 report from General Electric's CEO, and he was publishing results, but he was bragging about a lot of money paid in federal taxes, payments to suppliers, payroll spending for employees, long-term research. And he quoted something like, the income of the firm is shared among those who make it possible. Obviously, Bertrand, these are the businesses we want, but to have them, we need what you always say in the book: finance to be a good servant and not a master. The thing is that while business leaders may aspire to virtue, they are bound by a fiduciary duty to maximize profits, and sometimes they feel they find conflicting demands, while stakeholders ask them to do good, but shareholders request constant profit maximization, even quarterly. So the question is, with the average stock currently held for just a few months versus in the 1960s for a few years, with our beloved discounted cash flow model not valuing income into the future much, and with quarterly results still triggering investment decisions, how can we reverse the tide on short-termism? How can we allow business leaders to truly pursue the triple bottom line?
Well, I think you raise the question, and there are two things that we can envisage. First, what can we do within the system that is existing today? And again, there are a lot of things that can be done. So we should not just be shy and say it's not me, it's the system. Also, let me share with you the most, how can I say that, the most heartful anecdote of this period. In early 2008, we organized in Paris a seminar on the subprime crisis. It was before the bankruptcy of Lehman Brothers, so at the very beginning of the crisis. And we had invited Paul Volcker. Paul Volcker, which was the head of the Federal Reserve under Jimmy Carter, the guy that defeated inflation. So the central banker with a capital C and a capital B. And then he was called back from his retirement by President Obama to help him design the so-called Volcker Rule to prevent banks from speculating on markets, basically, and investing their own balance sheet into speculative assets. And I remember Paul Volcker was asked by somebody in the audience, say, but Mr. Volcker, why are you criticizing us? Why are you criticizing Wall Street? At the end of the day, we are just doing our job. And so the rules are the rules, and we just abide by the rules. And Volcker told them, guys, I mean, this is just not reasonable. You're very well paid. You're very smart. You graduated from the best universities. You cannot pretend you don't know. And he said, which was, I mean, like a punch in my stomach, he said, I will not accept in 2008, no more than I would accept in 1945, the excuse of Nuremberg. You just cannot say you don't know. So you are part of a system, you just can't accept it as it is. And that leads me to my second point. So while we can do things within the system, we should also work on changing the system. And the system as we know it, as I said, it has a genealogy, it has a birth, I mean, the early 70s. That's the way we started to really work on the accounting standards, the remuneration policy, I mean, the stock options, for instance, LTIP, for instance, the fiduciary duties, the way rating agencies are working. I mean, everything which makes your daily life, my daily life, what it is today. And this is a cycle. And Friedman actually said, when the previous system died, mine was ready. So now we have to work to make ready the next system. And that's really what we all have to do. On the one hand, to do the maximum within the existing rules, and the other hand, try to adjust these rules for the future. And that's where the tension is. And it's a difficult exercise. It's a difficult exercise, but we can't hide ourselves behind the rules and say we can't do nothing. The weakness of this is that today, the system relies a lot on the goodwill of individuals, goodwill of CEOs, goodwill of president of organization, goodwill of individual consumers, investors, staff members, etc. They can push, and we all push, and there are things happening. So we should not be totally depressed. There are things happening. But if we want this to move to the next stage, we have to basically open the hood, take our toolbox, and work on the engine. I mean, it's really working on the operating system. And let me quote a guy that I admire a lot, a guy named Colin Mayer, who was a former dean of the Said Business School in Oxford. He published a book 2 or 3 years ago called Prosperity. And in his book, he says the social purpose of business should not be to increase its profits. So profit should not be an end to an end in itself. Profit actually, as I would say, is not an end into an end. It's an imperative. You need to be profitable to survive, but the profit is an outcome. And the profit is calculated based on norms. What are our norms on revenues? What are our norms on cost? What do we incorporate in our P&L? So again, we understand the concept of profit, but there are many ways to calculate the concept of profits and then performance. So what Colin Mayer is suggesting based on this type of idea is that the social purpose of business should not, as I say, be to increase its profits full stop. The social purpose of business should be to find profitable solution to the problem of this planet and its people. Every word is important. We have to find profitable solution. Profit is a means to an end, not an end in itself. And because we are profitable, that why you can be rewarded. And this profitability makes sure that there is something useful, which will last over time. And that's how you put profit in something bigger than it is. And that's a real change. And he say for this planet and these people, because I mean, there is no point of making profit if it doesn't benefit us at the end of the day, us collectively as people and us collectively as people on a given planet. Maybe Elon Musk will send us to Mars soon. So in that case, we might say to the people of these planets, but for the time being, we're stuck on this planet, and so we better do the best out of it.
Thank you. That was a good one. And Volcker was not the only central banker who was called on retirement to solve what Mario Draghi, Bertrand.
Yes. I was about to say, but I try not to interfere in other countries' policy.
It reminded me to Draghi, but yes, work on the engine. And this leads me to the next question of how can we come up with appropriate instead of excessive regulation, i.e. the role of governments in building back differently, because while it's true that the COVID-19 crisis is highlighting many countries' systemic weaknesses and inequalities, but perhaps it's also providing policymakers a once-in-a-generation opportunity to tackle them differently. The thing is that some argue, Bertrand, that fiscal spending is the only game in town because central banks have many few bullets left, that governments should play a bigger role, ensuring obviously universal access to healthcare, education, digital technologies, but a bigger role that we realize today that governments can even borrow more than we thought without upsetting financial markets. But others have a completely different vision, and they think governments should simply set up the frameworks and the incentives so that the private sector can come and help and take a leadership role. The other day, I read Mark Carney on the Financial Times, and he was on policy. He was quoting 3 Fs, quite easy to remember: fiscal spending, framing, regulatory initiatives, and finance. So what do you think, Bertrand? How can we strike the right balance?
I think he's right. First of all, it's time for the pendulum to swing back to something more central. We've moved from a moment where Ronald Reagan in his inaugural address says the government is not the solution, the government is the problem. And so we moved away from government. Now with the COVID, I mean, everything is government related. So I think we should realize what I said before, and what I'm repeating today, that none of the problem connected to the Sustainable Development Goals can be addressed by the government or the private sector or civil society alone. So we need to move to a place where everybody is playing his role, but you have a governance of these issues, which coordinates the relationship between public, private, and civil society. And it's a hard take, because there is a lot of suspicion. One of the consequences of the many crises we've been through, and this one is also, I mean, as you see in many countries, distrust is the name of the game. Distrust vis-à-vis finance, vis-à-vis politicians, vis-à-vis science, vis-à-vis technology, vis-à-vis elites in general. We have this issue. And without trust, it's very difficult to cooperate. On top of that, we don't have that many people that can speak different languages. You know, we are in a world which maybe it's a legacy of Taylor, where everybody is swimming in his lane or running in his corridor and don't understand the problems of others. But you will not address poverty, water, climate, cyber, just you alone. Even not the biggest country on earth cannot address these questions alone. So we have to relearn cooperation. We have to speak different languages. We have to be bilingual, because if not, I mean, suspicion will be the name of the game, and it will be a complete disaster. So for me, it's essential that we and in particular in Europe, where we have this tradition of public-private cooperation, I think this is where we should reinvent this type of tools. When I wanted to be provocative after the Brexit, you know, everybody, maybe a little less Milan, but in particular, there was a big fight between Amsterdam, Frankfurt, Dublin, and Paris to get the whatever could be taken out of London, out of the city of London. And so the people tried to attract, you know, bankers and M&A bankers and traders, etc. I say, okay, that's fine. It's the name of the game. But the real question is not to try to copy or emulate London. I mean, none of us is capable of doing that. I mean, they are different in nature. None of us have the British Empire. None of us has English language. None of us has a connection with the Middle East and the Far East and so on. It's very difficult to reinvent that. I mean, we are not the Brits at the end of the day. Sorry for the BCI. But that's, no, but I mean it, and I have profound respect for that. So it was a good question would not have been to say, how can we take a piece of the beast? But what is a financial center for the 21st century? And I think the Europeans should have worked together instead of competing, you know, one against the other, and say, okay, what do we need to bring to the world to make a difference? And I think the main issue is we could be the place where we discuss climate transition, where we discuss demographic transition. We are aging. What does it mean in terms of credit and savings, for instance? And I mean public-private cooperation. Can we develop new types of finance? Can we be the place where we really invent the tools for blended finance, for joint cooperation, etc.? That would make a difference. Can we engage in a more forceful way with the emerging markets in Africa? I mean, we keep saying, yeah, we have a problem with Africa. Okay, what do we do with that? We know that today you have 1.5 billion Africans and 500 million Europeans. At the end of this century, you will have 4 billion Africans and less than 500 million Europeans. So if we don't take care of them now, if we don't work with them now, we have a problem. So now is the time to discuss a different finance, not just copycat a model that I don't think we'll ever be able to copy at the end of the day.
Thank you, Bertrand. And this is a great idea because we're not number one in technology. We're not number one in many, many topics, but we can say and we can tell that we are number one in sustainability with the Green Deal. And so absolutely, I absolutely agree. I'm skipping one question because I want us to have time to discuss impact investing. So I'm going to go into what was my question 5, which is finance and the journey to Ithaca. And quoting Victor Hugo, Bertrand, nothing is more powerful than an idea whose time has come. And for the asset management industry, the time for integrating sustainability criteria into investment decision making has definitely come. The idea might be as old as investing itself, because we can think of the Quakers and the Methodists refusing to invest in slaves. We can think of investors opposing nuclear arms or during the Vietnam War and fighting racism against South Africa's apartheid last century. But I see a kind of evolution from doing less harm to doing more good, from exclusions all the way into impact investing, into providing solutions with the capital employed. Now, you've written articles with Sir Ronald Cohen, which is another person I deeply, deeply admire. And Ronald Cohen, as you know, has a vision of the fact that the 19th century was the century of returns. The 20th century, we added a new dimension and we learned how to manage risk. So we turn it into 2 dimensions, risk and return. And, you know, he always says that this will be the century of risk, return, and impact, of the famous 3 dimensions. I mean, we hope it's true, but we also know that impact investing is facing a bit of some challenges in terms of trust, accountability, how to measure, manage, and report on impact, which I'm sure you are experiencing, because it's not that straightforward. We haven't done it for the last 300 years. So what is your vision about it? How are you seeing finance in 20, 50, 100 years' time?
Well, I think thank you for raising this companionship with Sir Ronnie Cohen, actually. And you might have noted that this evolution from 19th century to 21st century, from risk to risk return to risk return and impact, is really something I discussed with him many years ago. Actually, we came to that vision. And it's very interesting because Emmanuel Macron, I don't know whether he's still popular or unpopular in Italy, but whatever, he's a friend, and he was kind enough to write the foreword of my book. And that's precisely the point he's highlighting. He says, this is it. Maybe because he was a banker at Rothschild before, you know, it says a lot. But I think it's important. He really points at the finger at the important issue, which is our models, because at the end of the day, this is the way we calculate things. And if we don't change our models, we don't change the way we look at things. As we very well know, the way we measure, the way we calculate means a lot on the way we do or don't do things. And I think this is precisely this moment in time, and Ronald Cohen has been a force in that direction to say we need to work. I mean, at the end of the day, IRR is a very sophisticated analysis. I mean, we made it very simple. So you say, oh, it's an IRR of 8.5%. But there is a lot of assumptions behind this. There is a lot of things. So we can make it a little bit more sophisticated by taking on board climate, nature, the cost of living peacefully in society, and these type of things. There is nothing that prevents us from doing that. And that's, I think, the fight of the coming years. I think it's extremely promising that things are moving. But I don't think we're there yet. Again, I don't want to be too complacent too early. We, all of us today, we have the feeling that things are changing fast because we are all in the same fish tank. So we all talk to people which think the same. And so you have, it's a cognitive bias that is very well known. I mean, talking to people, you know, we are, today maybe we are the kind of Impact Fox News network. We are together watching Impact. But I have no idea whether we are a tiny aquarium in a big ocean or whether we are a big aquarium and then we're about to kind of cover the whole ocean. So we should really pay attention to that. And that's why I think working hard on the underlying system, not that I'm a Marxist, but I believe infrastructure means a lot. that you need to work on things that makes your life a routine. The objective is not only to make the impact approach mainstream, but a routine, something which is just so embedded in our way of doing that nobody questions it anymore. Today, we are at this moment where, as you say, there is a growing momentum. There is a tidal wave, but it's still ambiguous. You have things happening. So everybody says it's great to have 40 or $50 trillion or euro invested in ESG. Well, that's probably true, but let's face it. I mean, what is exactly ESG? In a number of cases, people are very genuine and sincere and go fast and deep. Fair enough. And that's not my job to test with a serum whether they are telling the truth or not. I'm not in that business. So I'm taking things at face value. But we have to be cautious. I mean, again, ESG is, as lawyers would say, it's the best effort things. I'm trying to commit to do good things. It's a good starting point. And I think it's a good point to socialize these ideas. But we have to go further down the road. And for me, again, I don't want to be a grand priest of impact or an impact mayor or whatever you call it. But I think it goes beyond. It's not just about best efforts. It's about outcome. It's about measurement. It's about third-party verification. As we said, there is a trust issue in the system. It's not just because you say, I'm going to do great things that people will buy this 100%. And that's where the title of my last book comes from. Do we seriously want to change the world? Of course, the important word is seriously. Everybody say, yes, I want to do big things. I mean, I had this conversation with one of my friends after a Davos discussion, after a Davos week, and we were both back, and my friend told me, oh, it's great when you come back from Davos, all the world's problems are solved. If you add up all the commitments, we are done, it's okay. And then you come back the year after, and oh my God, the problems were not solved, what happened? Yeah, because if we are not serious, if it's just about verbal commitments, some are genuine, some are less genuine, some are pure washing, some are pure marketing. So that's this moment that we have to create and basically push people to stop thinking about this, make it happen. And that's where we have to find the relevant forces to go in the right direction. We have the roadmap. I mean, the Sustainable Development Goals are roadmap. It's not ideal, for sure. It's complex. It's mostly addressing public sectors, perspective and issues, etc. But let's be realistic. There will be no discussion at the global level to agree today on something else. So let's stick to that. Let's stick to the Paris Climate Agreement. Let's stick to what's going to be discussed on nature and biodiversity and try to make the best out of it. And that's really where our efforts should be focused in the coming years.
Thank you, Bertrand. There's a sentence you mentioned that it struck me, which is, it's not just about efforts, it's about results and third-party verification to build trust. And you're totally right, because if investors see that the biggest 10 ESG funds in the world are all invested, like their biggest holdings are Amazon, Facebook, and all these big, FANG stocks, then the trust in sustainable finance diminishes. So it is very important, and work on infrastructure, as you rightly said. Would you please now tell our friends about Blue Like an Orange Sustainable Capital? Which type of financial returns are you targeting? Which social and environmental outcomes as well? And if you're targeting some SDGs as opposed to others, tell us about this wonderful project.
Yeah, so there are things I can share and things I cannot share for regulatory purposes. And I'm not supposed to talk about performance online. This is prohibited, as most of you know, I suppose. But in principle, there are few ingredients to the Blue Like an Orange sauce, which basically came out of the book that you just showed. I spent a year after the World Bank in a think tank, thinking about how can we really mobilize these billions to get to the trillions. Again, just to put things in perspective, most people talk about GDP. And they say, yeah, GDP X, GDP Y. And then you say, okay, what is the GDP of Italy? What is the GDP of the world? What is the GDP of the EU? And then you realize that 95% of the people have no clue. They talk about it, but they forget. And I like to remind people that GDP of the world, depending on how you measure it, and there are different ways to measure it, is around $80 to $100 trillion. So it's a lot of zeros. And then when you put in perspective the money transferred to support emerging European economies, it's in billions. So how do you move from these billions to the trillions? How do you bridge the gap? And the gap will be bridged partly by public money, as you discussed, fiscal policy, public aid, etc. But the gap will be bridged by private money. And that's what we need to organize to make sure that, let me share an anecdote with you. When I was still at the World Bank, we had a meeting in 2015 with a UN delegation, mostly from the General Assembly, so ambassadors, etc. And so we were they came to the World Bank to discuss the financing of the SDG. And they say, Bertrand, you come from the private sector, you're a finance guy, so how do we finance this? And one of the guys, I was stunned because I couldn't believe my ears. He said, oh, it's great. We will ask Qatar and Norway because they are very rich to give us the money to finance it. And I say, it doesn't make any sense. I would not ask them money. And once the money is given, it's lost. And on top of that, it's not at the scale. Even if it's rich, in a $100 trillion economy, even $1 trillion of Norwegian euro will not make a difference. So this is not the right way to get there. The right way is to organize a system through which investments, public and private, will flow to where it's needed. Instead of buying negative rates, French, German, Swiss, Japanese, Belgian bonds, not yet Italian, coming closer, you should invest a little bit of your money where there is growth and needs. Okay, it's riskier, that's true, but let's work on that. And how can we make a difference? So it was it's still actually an allocation of capital issues that we are facing. Too much money going in places where it's not needed and too little going where it's needed. And so the rule like an orange came out of this diagnosis. So first, we need to find a way to channel money where it's most needed, including economically. I'm not talking about charitable money, I'm talking about investment opportunities. Second, we need to work with the system as it is today. And the system as it is today means that for a pension fund, an insurance company, a sovereign wealth fund, etc., they have fiduciary duties. They have to be paid for the risks they are taking, full stop. And you cannot play with that. I remember I had a conversation with a pension fund guy who would say, you know, Bertrand, I cannot tell my guys that they will make less money on earth in order to be rewarded in heaven. It might be working. I mean, when you're very wealthy and you have your own family office, you can do whatever you want with your money. But if you manage other people's money, you can't do that. So to come back on your point on performance, we target commercial returns because this is it, full stop. And we don't even question it. And second, of course, we add an impact perspective to that. And that's critical. And to get there, we have developed our own impact rating mechanics, which we have called SDG Blue. It's an impact rating the way you have credit ratings. The idea is the way you can compare the credit rating of a country, of a sovereign issuer, to the credit rating of an international organization, to the credit rating of a bank, to the credit rating of a corporate, etc. We wanted to be able to compare the impact rating of $1, the impact value of $1 invested in a project A in education to $1 invested in project B in health, etc., even if education and health are different. And so we put our system together. So first of all, financial returns. Second, impact rating measurements. Third, we have partnered with the Inter-American Development Bank, and it's very important that we have this public-private cooperation I mentioned earlier. So it's important part. Fourth, we have been backed by a number of individuals which believe that now is the time to see finance a little differently. People like a strong voice like Paul Polman, for instance, or Emmanuel Faber in France. We had some trouble in the past few weeks, and others. And so this is this combination of impact rating system, individuals supporting the idea and opening doors on the ground, the partnership with a public institution, and very strict on finance and impact. This is what it means. So we started with a private credit fund in Latin America. We've closed it last year. We're investing it, and we continue. Now we've passed, I think, the viability threshold. So now we continue, and the idea is to roll this model in different continents, etc. But that's really where we're coming from. Where do we invest? I mean, projects which are mostly mid-sized companies, a little bit of infrastructure, mid-sized companies. The investments we have made, which are public, are in health, in access to finance, in infrastructure. So it's pretty diverse, but it's connected to the Sustainable Development Goals framework. It's really, and the vast majority of our LP investors are institutional investors.
Okay. How interesting. And you mentioned that you started in South America, and I perfectly knew that in partnership with the Inter-American Development Bank. But you said you intend to move into other geographic areas in future, Bertrand?
Yeah, if I project myself 5 years or 10 years down the road, I'm convinced that Blue Like an Orange will. My dream is for Blue Like an Orange to be one of the go-to place if you want to make impact in emerging and developing economies. So I'd like to be present in Latin America, in Africa, and in Asia. But you have to do once at a time. I moved from being in big organization to being small entrepreneurs with my partners. And so it takes time. You have to learn patience.
Of course. But I'm very glad you're.
It's working. That's the good news is that we've passed all these moments where now, I mean, I see the future. And I'm not supposed to say that, but very happy to take any calls offline.
Super. Sorry. When I asked financial returns, I meant, above market returns, below market returns. No, I wasn't willing to.
No, but I mean, I'm very happy to comment offline on this, and I have precise answer to all of this, but I'm not allowed by regulation to do this type of marketing statements.
No, of course. Absolutely. So we've got a question from the audience, but since we are perfect in time, I would like to, I'm going to ask you that question later. I would like to play a game with you, Bertrand. This is a short Q&A where, if you don't mind, you provide short, spontaneous answers. So,
that's very scary.
So if I say A or B, you can still say C. You don't have to choose either one or the other. But
I have a wild card like in Jeopardy. I say no.
Exactly. Totally. I'm not gonna say Paris Saint-Germain or AC Milan. No. I know the answer. The first question to you is, would more women in leadership roles lead to better social, environmental, and economic outcomes?
Actually, that's a good question because I'm working with a good friend on a book on this, on female leadership. What I strongly believe in is that from a leadership perspective, there are not that many differences, and or they are cultural, and they are, what for me is extremely important is the mixity. You said mixity, or you have men and women.
Yeah.
I don't like places where you have 90% of women. I don't like places where you have 90% of men. And so I think to have a reasonable equilibrium, 70-30, 60-40 is about right. And I remember I said that, I know Crédit Agricole is a tough topic in Italy these days with their offer on Credival. But when I was CFO, we had this monthly discussion with the Crédit Agricole team, and which are the 39 presidents and 39 CEOs of regional banks. And at that time, out of the 78 people plus some others, you had like 3 or 4 women. And I remember I said once, I think the atmosphere would be a little different. Instead of 3, we had 30. And see, they made a lot of progress in. So it's moving in the right direction. So for me, the key is equilibrium.
Thank you very much. Should central banks continue using corporate bonds and bank loans of high carbon emitting companies as collateral, Bertrand?
I don't think so. Or at least they should start having a real policy on that. I know Christine Lagarde, as part of his strategic review, is moving in that direction. There are a lot of debate here. I remember when 10 years ago, yes, or 6 or 7 years ago, I spoke to a former head of the ECB. You can try to imagine which one. And I say, well, I mean, there is an international agreement on climate. So it's not just that you make up your mind. I mean, your shareholders have signed a paper in which they say they support this. So why don't you go big on green finance and buy assets which are related to that? And I remember the guy said, yeah, green, and why not blue, red, or yellow, or purple? I said, well, it's a big difference. There is no purple agreement. There is a green agreement. And now they've moved in that direction. So I think, of course, all these shifts are difficult. I mean, there are a lot of constraints, but I definitely support the idea of being consistent.
John Maynard Keynes or Milton Friedman?
The truth is that I just finished a biography of John Maynard Keynes. So I didn't know the guy. I had read his books when I was in school, and I'm fascinated by the guy, much more actually than I'm fascinated by Friedman. Friedman actually, I mean, he influenced when I was in school, etc. But really, Keynes is an amazing personality because he was not an economist by background. He became an economist, but he targeted the prosperity of a democratic system, etc. So I really, I wouldn't say fell in love, but I really felt that this. If I had somebody to meet today and go on vacation with, it would be Keynes. Yes, not necessarily what people have done with Keynes after he died, but with a personality for sure.
Yeah. I didn't read the book, but I listened to an entire podcast on Keynes, and there's so much we don't know about the guy.
He had an amazing life.
Amazing. Your favorite?
And you know, just to you understand that I love anecdotes, and I have a daughter whom you met actually. She's studying in Bocconi in Milan, so I have a vested interest in Italy. And before she left for Italy, I took her on a trip, just the two of us, dad and daughter, in the northeast, Maine and New Hampshire, in June 2018. And we went to Bretton Woods. This is a famous place where basically we created the Bretton Woods Order, the IMF, the World Bank, etc., where Keynes and his US counterpart discussed the future of the world. And I remember because it was more or less at the moment where the G7 in Canada collapsed, with Trump refusing to sign the agreement. And I sent a note to my friend who was participating to the G7, and I told him, I'm with my daughter where everything started. I hope you're not where everything, not at the place where everything is ending. And I had a deep thought for Keynes that day.
Well, I'm glad we know we have a new president in where you live. Okay, interesting. Your favorite head of government ever, today or a past head of government?
That's a tough one. I think one of the life I found the most fascinating, although I'm not sure I would go on vacation with him, is Churchill. I think this guy has made amazing things, has made amazing mistakes. He's typical larger than life person. A little bit like the two Roosevelts in the US or De Gaulle in France. So I don't know. I mean, I'm fascinated by these people which have emerged in particular circumstances, which might have been nobody if nothing had happened, and have become, as you said with Victor Hugo, I mean, when you seize the moment. If there had not been any Second World War, neither De Gaulle nor Churchill would be known today.
Totally. Your favorite spiritual leader?
Well, I like Pope Francis a lot. I had the privilege actually to see him from close, and in particular when he explained to a small group of people what he meant with the globalization of indifference and the necessity to fight against it. I must also say that I had an enormous privilege to have a private visit at the Vatican under John Paul II. And I remember we were asked to be there at 5 a.m. in the morning. Some of you probably have had this experience. And then you are accompanied by a Swiss guard to the private chapel of the Holy Father. And then we entered, we were with a few friends, and you entered the room. And I remember it was in late 1990s. So he was already pretty tired. And I saw this person from behind. And I really had the feeling that he was carrying the pain of the world. I don't know how to characterize this, but I say, wow, this guy every morning is praying for all of us, and you felt something in the room. And so these two moments have been quite extraordinary for me. So I am biased because I'm Catholic, and I have the privilege to meet two of the most powerful voices. But that's it. Yeah.
Amazing. Look, I've got other questions, but
too long. Sorry, I can.
No. Okay, let's try to make them very short, because we've got 3 questions from the public. It's fascinating, Bertrand. I would listen to you for hours, but I don't want to take more time. The alternative to neoliberalism, one word.
Impact.
Have we reached the tipping point on global awareness on sustainability issues? And I am referring to Gladwell's tipping point. Yes or no?
No.
Meaningful change equals innovation plus social commitment plus add whatever you want to the formula.
Plus impactful finance.
What else would you add to the well-known essentials of happiness? Nurture personal relationships, do work that's meaningful, want less, fear less.
Sorry, I didn't understand.
Happiness,
yes.
Normally, what they say, spiritual leaders, such as Francis, but the Dalai Lama, and well, normally the definition is like you shall nurture personal relationships, you shall do work that's meaningful, but also want less, especially material things, and fear less. Would you add something to the formula, or perhaps that's perfect for you? I don't know.
Well, I think, and it's also a quote I've made quite often these past few days, which I borrowed from Tolstoy in War and Peace. Everybody wants to change the world, very few want to change themselves. And so ask a lot about what you can do, and nobody will make the decision for you. And it's very difficult. I mean, I'm paying a heavy price every day. My kids criticize me. They say, Daddy, you're asking for us to be sustainable and you keep drinking water in plastic bottles. And they're right. It's bad.
I know. It's be the change you want to see in the world, and everything comes from inside otherwise. Is it true that it's difficult to find good Italian pizza in Washington, D.C.?
No.
Okay. This is
very good one last week. So
I'm glad to hear that. Okay.
Immigration did not stop in New York.
Okay. Thanks for the tip. Okay, first question from the public, Bertrand, and we've got three. It's from Roxana Kama. Firstly, thank you for your amazing book. My question is, let me move the Q&A. Yeah, my question is, what do you think is the role of the younger generation in leading purpose finance? What measures could be taken to influence/educate students, young graduates, to take part of this change and build sustainable economies?
So there are a lot of questions in one question. So I think, first of all, the young people can do a lot on their own, the way each of us can do a lot. At the end of the day, as I said, if we don't change ourselves, there is no way the world is going to change. So we have to be, of course, we have different capacity, but I think people gathered today have more influence than the average people on earth. So it's not being flattering, it's just the truth. So we should be very conscious of that. But I remember a conversation I had with Paul Polman. At that time, he was the CEO of Unilever. And I told him, why did you change the course of Unilever? And he told me, it's not just because it was my strong conviction. It's also because I couldn't attract any talent. And today, if the young population say, I don't want to work in companies which produce crap, which are doing bad things, or etc., that will put pressure on the companies. So it's not just about investors. If consumers say, I don't want to buy this type of things or this type of service, so we have the capacity to have this pressure on people, and the young like anybody else. So I think it's extremely important. The second point, because I've kind of considered myself in retrospect, what I've learned at school has influenced me for many decades. And so I think it's really time to work on the business schools programs and university programs, etc. What are you being taught at school will have a lasting influence on what you do. And it's very interesting because a month ago, I was asked by HEC, so the French Paris Business School, to give a keynote speech to all the first-year students. So they had just done, they had a first quarter now compulsory introduction to impact, because I did a little research with companies, so very nicely so. And then you realize that it's like a separate box. And then the finance major hasn't changed at all. And so you have a problem to reconcile things. So on the one hand, you have a track called purposeful leadership. On the other hand, you have the track, the finance major. And And so for me, it's very important to start influencing all these things, and that will take time. And for those of you who are in the academic world or which are teaching, etc., I think it's important to push these ideas. That's what I'm telling my students. When I was in your shoes, that's what I heard. Now you hear me, try to see what you do. But today, to come back to your questions, the jury is out. So they have conflicting things. And so we have to help them make their mind. I don't want, I'm always reluctant because I don't want to force people to do things. I mean, at the end of the day, who am I to tell you this is the right way for impact? I mean, there might be different ways, but at least to open their mind and say there might be other ways to do things.
And it is true that we still emphasize the old bifurcated system of returns and philanthropy. Thank you, Bertrand. Another question from a very good friend who's actually professor at Católica University, Tommaso. Question about system. We talk about sustainable investments, but finance system is sustainable. Banks and bank systems in many countries are very fragile, but somehow leading the games over the governments, we need more cooperation. But concretely, who has the power to make some concrete steps? The German-French partnership? Question tag.
Those are very good questions. One of the big difference between now and what happened in 1945, in Bretton Woods, basically the US imposed their way to the world. Even Keynes could not do anything. He was the smartest by far in Bretton Woods, but you know, as apparently Stalin once asked about the Vatican, how many divisions? And in 1945, all the gold was in Fort Knox. And so even if you were smart, you had no choice. So the US was a master of the world. In the 1970s, let me put it this way, the Anglo-Saxon was a master of the world, in particular the US. And it's no wonder why the consensus was called the Washington Consensus. Today, it's more complex because you have no master of the world. So we'll see with Biden. He's apparently willing to reshuffle the US leadership and re-engage. But also, as I said once, it's America first with a smile. We shouldn't be fooled by this. I mean, it's very, very much driven by a domestic agenda. We have the Chinese, obviously. We can't ignore them. They were not existing in 1971. I mean, even if it's the same year than Kissinger went to Beijing with Nixon. And so I believe that the Europeans have a particular say in this. As you rightly reminded us, Paule, the Europeans are ahead of the curve with the green recovery package, and they stick to that. I mean, they've not been perfect on every front, as you very well know, but on this, I think they're still there. They put together this taxonomy package. They put together this non-financial disclosure directive. And so there is a lot that is happening in Europe. And I believe there is a way for Europe to engage the rest of the world and propose something. So you can see it from two perspectives. Ideally, and interestingly, I gave a lecture to a Chinese university last week, and it was pretty interesting because that was the first time I think they told me, I don't know whether it's true, I had 20,000 people listening to me, which was very exciting. That's the positive news. The negative news is that it was at 11 p.m. DC time. So it was not so... and I told them at the end, because they raised exactly the same question. And I say my dream is that we are capable of coming together, China, Europe, the US, and the rest of the world, to define what is sustainability, what is resilience, what is inclusion. So that's what I'm dreaming of. But let's face it, it's going to be a long way. So there is a second best, which is, are we capable to have a Western vision of that? I know Western smells Cold War, but so for lack of a better word, or let's call it G7 way, that's the second best. And the third best, which might be actually what will work at the end, is a European view. Because what I wouldn't like is the Europeans to be once more naive. So we've been ahead of the curve. We spend more time and more money around this, but at the end of the day, in particular, the Americans smells good business, and they are good at doing that. I mean, no wonder why the rating agencies, why the largest asset managers, etc., are Americans. So will the system be defined by the European Commission, the taxonomy, etc., or will it be defined by BlackRock, Bloomberg, and the rating agencies? I don't know, but you should all keep in mind that it's not just the technical conversation. It's discussion about our values. Actually, what we are discussing, the norms that will emerge from this big planetary discussion will be defining what is good and what is bad in 10 or 20 years from now. And it's an important question. And if you are, let's say, a Middle East sovereign wealth fund, and you say in 2045, I want to invest in a good impact system, which one do I choose? Do I choose a Bloomberg one, or do I choose a taxonomy, or do I choose the Beijing one? And that will have a lot of impact. And that's where I think, don't be naive as European. Let's keep pushing, make sure our norms are taken in full account, and then try to engage with others and try to come to something together. As you very well know, it's not the case for accounting standards. We still are struggling with two, the US GAAP, and more than that, but IFRS. And the two that IFRS are largely US inspired. And the EU has kind of abdicated this. So I don't want this to happen again. We should not abdicate a second time. We have to be strong on this.
I totally agree, Bertrand. There are two more questions, but the time has gone, and I think you might have other, I don't know, please tell me, would you take another question or not, or we stop here? It's been
just one.
Just one minute.
The truth is that I am in my office in Washington today for the first time since last June. And the team has organized a lunch with a person leaving for Europe. And so this is the first lunch with the whole team in a year. So I told them I'm going to be a little late, but I don't want to be too late.
I'm sorry for that. Very quickly from Julia Galuccio. How do you see the EU effort on taxonomy? Perhaps you answered already, of sustainable activities. It will help, there's a small mistake, that will help in finding the right path to transition. Is it the right way to achieve the good results? Do you see a need for sustainable finance to address the climate change adaptation needs in Europe?
No, I think, I don't know whether it's the good or the bad way, it's the European way. That's the only way we can do, to have this big commission with multi-stakeholder, 27 countries, etc. And at the end, you have a sick book. I think it's kind of okay, but we have to make it marketable as soon as possible. I mean, we have to sell it to the rest of the world and to explain what we mean with it. As I said, it's really time to engage, because what I'm hearing in Washington is that Biden he gets that. He has appointed somebody in his team to follow on climate finance, somebody at Treasury, etc. The whole American ecosystem, the whole academic system is behind it. There is business. I mean, the people that will define what is impact will make a lot of money. So again, we should not be naive, and we have to push hard for what we've done, because at the end of the day, we started a little earlier. We are more genuine, more sincere, but sometimes we are not as market friendly. So that's.
Yeah, totally agree. Well, Bertrand, thank you very, very, very much for this thought-provoking talk. Thank you for just showing us the bottle half full, because the more the world sinks into, or the deeper the world sinks into chaos, the greater our responsibility to radiate kindness, empathy, and generosity. And this is what you've done today with us by accepting our invitations. So really, thank you very much. And whenever you come to Milan, you'll be welcomed by us.
As I told you, I have another excuse with my daughter in Bocconi. So
exactly. Isor and us will be there welcoming you. Thank you, Bertrand.
Thank you,
everyone.
The rest of the day, and good luck for the end of the pandemic.
The same for you in the US, on the other side of the Atlantic. Bye-bye.
Thank you, everybody.